Hello traders, Gary Wagner here. Approximately 12 noon in Honolulu. That puts it 6 o'clock in New York City on Wednesday, the 23rd day of May. And this is the daily report for gold and silver. In what can be best described as a roller coaster ride, we've seen these metals all over the board, mostly lower, but coming well off of the lows. Wait till you hear these trading ranges. First of all, the close in the morning session, and this is basis cash, is down about $6, 15.6121. You can see that on the current screen, and Kitco has it at 15.6330. The low 15.3240 and the high 15.6560. We'll get back to that in a second. Silver off about 36 cents on the day. Current print 27.77. 27.04 is the low and 28.02 is the high. Talk about a ride of your life, a roller coaster ride, so to speak. When we take a look at this market, this, of course, it's a daily chart, cash chart, 440 minutes. I'm going to break it apart into different minute variables so that you can see it, but we're going to first start with this daily. Really, what you can see here is that as this market came down, and this is on a daily chart, so this is 2 days ago, we had that huge drop the other day. The market comes down, and you can see it opens right here, but it goes and it makes this tremendous low, actually matching this low right here, and then buyers come into the market and it brings it back up. Incredible activity in the marketplace itself when you consider the range that it had and the fact that right now it's very, very doji-like. The open and close are about the same. It's very significant, but we have seen this market really run the gamut in terms of ranges. And of course, the ranges themselves have been so dynamic because of the news that's coming out of the European Union. We've got an incredibly strong dollar, but when you take it to a 240-minute chart, unlike the doji that we saw on the daily chart, you can see in a 2-hour period this market came down, touched upon this low, and the next 2 hours we saw it make up all of that space to close virtually unchanged. It's a very, very odd formation. I've not seen this in gold except for one other time. Now, traders, all I have done here is taken that 240-minute chart and compressed it. Reason for doing that is I'm simply going to look to put a area, a red flag, so to speak, at this potential double bottom. And what's most interesting is we know that there's some good support in this area. We've seen it on a couple of occasions. We've seen this low hold. And this is roughly the 1520 area. That's why, as you can see, this low was 1532 right in here. It's just above that. But in terms of the big picture, this could certainly, in the long term, hold as a support level. However, at this moment, I question that. You know, I had made a recommendation to take our stops to the market on any sign of selling. We got out with a small loss. We're in at 88, out at the roughly 1560 area, which is where it's at now. And my recommendation has to be to sideline this market right now until we get a little bit more information, is going to have increased volatility. And what I mean by information is as news comes out of the European Union, the summit meeting that began in Brussels, there is a lot of talk going around. One, of Greece leaving the European Union. That was what really set this off. But it's really the strength of the dollar more than anything else that has been precipitating this kind of a wild ride in the marketplace itself. Traders, as we talk, we are opening up for the afternoon session, the overseas session for me, of course, being in the United States. This is a Heikin Ashi half-day chart, 720-minute chart, and as you can see, we've had these really, really strong red lines down. You can see this low right in here. It's matching this low, a little bit above it, as I said, 32 being the low. But interestingly enough, when we convert this, which is what I'm going to do, back into what's called a standard candlestick chart, you're going to see that it looks quite different. Again, we have this market moving up. We've got a solid hammer right in this area, that's indicative of a buy signal. However, in a conservative mode, you want to wait for confirmation. Even if we get into this market later, if we make the decision that it has hit the low, it's whipped around enough, and it's time to position ourselves back on the long side, we need to see in terms of a candle size, we need to see this market a little bit more vibrant than that. In other words, to take this kind of a hammer call, you have to get the confirming candle. Confirming candle is going to be a green candle with a higher high and a higher low. It's going to look something like this. So it's going to really have to pop above 1570 before I'm really comfortable entering this market from the long side. There's so much risk on the downside. I happen to think that we're finding some bottom activity, but that wasn't the case as we saw the market go to 1532 last night and early this morning in trading. It is a perplexing market in that as these knee-jerk reactions come out to different pieces of news in the European Union, the one thing is whenever there's uncertainty, we always saw gold move positive. It was a bullish factor for gold. But we're seeing this risk-off mentality, meaning money is flooding into the dollar, into U.S. Treasuries. That is the safety ground right now. When you consider the banks in Europe, where are they going to put their assets, especially with what's been happening to the euro dollar? Well, they're going to put them into U.S.-backed Treasuries. They're going to put them into dollar-denominated investments. Now, as far as silver goes, first, let's look at our daily chart, straight candlestick format, as you can see right in here. We're having a series of higher lows. However, it still, in my opinion, remains under pressure, and I think that silver probably has further to go on the downside. Why? Well, the basic reason is because it is also an industrial metal, and the fact is that there is some question about how the global economy is growing. It's certainly not growing at the pace that we want, and they are experiencing in China a slowdown. Europe, well, we know they have problems there. What I'm simply going to do now is create a Henkin Ashi chart, and we do that on this system simply by using it as a indicator. And as you can see, this is that uptick that we saw, and we are still in straight red mode on our daily chart. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.